NVIDIA, the California-based chip giant, has once again captured headlines with its remarkable financial performance, delivering $46.7 billion in sales over the 3 months ending July 2025, surpassing Wall Street expectations, which hovered around $46.2 billion. The company posted a staggering 56% growth compared to the same quarter last year. This robust revenue jump not only reflects NVIDIA's dominance in the AI hardware market, but also signals the enduring strength of the artificial intelligence sector, even as some industry watchers warn of a potential bubble. The health of the AI industry has become a subject of near constant scrutiny, especially as its influence on stock market gains and economic growth grows ever more pronounced. Since the AI boom ignited by the release of OpenAI's ChatGPT in 2022, NVIDIA has been at the epicenter of technological transformation. The company's market capitalization has soared to $4 trillion, and its stock price has rocketed nearly 700% over the past 2 years. These figures underscore just how central NVIDIA's chips have become, not only for generative AI products but for the future of computing itself. Yet, NVIDIA's journey has not been without challenges. Earlier this year, President Donald Trump imposed a temporary ban on the sale of NVIDIA's advanced chips to China, a move designed to curb China's progress in artificial intelligence and protect U.S. technological leadership. For NVIDIA, China represents a significant market, and the ban threatened to dent both revenue and strategic ambitions. In May, NVIDIA projected an $8 billion loss as a result of these export restrictions, sending ripples through investors and industry stakeholders. The policy landscape shifted again in July when President Trump revoked the ban and struck an unprecedented deal with NVIDIA. Under the terms of the agreement, NVIDIA may resume chip sales to China, but with a catch: the company must hand over 15% of revenue generated from these exports directly to the U.S. government. At a White House press conference, President Trump explained the rationale behind the arrangement, emphasizing national interests and the need for the U.S. to benefit from this strategic release. This new deal has forced NVIDIA to adapt swiftly. In the most recent quarter, the company reported that it did not sell any H20 chips in China and did not mention losses tied to the export policy. Instead, NVIDIA has focused on redesigning its chip offerings to comply with evolving regulations, balancing performance and market competitiveness. The threat of further restrictions remains a cloud on the horizon, and the company must navigate a regulatory environment that can shift at any moment. Meanwhile, the competitive landscape in China is intensifying. Domestic firms such as Cambricon are posting record profits and expanding their market share, buoyed by Beijing's push to develop indigenous alternatives to NVIDIA's hardware. These developments underscore the urgency for NVIDIA to not only maintain its technological edge, but also cultivate new strategies for global growth. Despite these headwinds, demand for NVIDIA's AI chips remains robust. The company's products power the data centers and cloud platforms of virtually every major tech firm, from hyperscale providers to enterprise customers. AI-related spending has become a bright spot in the U.S. economy, contributing a 0.5 percentage point boost to annualized GDP growth in the first half of 2025, according to Pantheon Macroeconomics. This surge of investment reflects widespread belief in the transformative potential of AI, even as some voices caution against unchecked enthusiasm. The specter of an AI bubble looms large in the minds of market participants. Prominent figures including Torsten Sluk, chief economist at Apollo, have warned that the current boom in artificial intelligence may exceed the exuberance and eventual collapse of the dot-com bubble of the late 1990s. Their concerns center on valuations that appear disconnected from underlying fundamentals, with top AI firms trading at multiples that defy historical precedent. OpenAI CEO Sam Altman has echoed these sentiments, acknowledging that the AI sector is indeed in a bubble phase. In a recent interview, Altman remarked, "Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes." Altman's nuanced perspective captures both the optimism and the caution that now define the industry, a belief in revolutionary change tempered by awareness of market dynamics. For NVIDIA, the path forward is one of innovation and agility. The company's leadership, under CEO Jensen Huang, has shown a remarkable ability to anticipate and respond to shifting technological and regulatory currents. NVIDIA continues to invest heavily in research and development, seeking to advance the capabilities of its chips and maintain its position as the backbone of AI infrastructure. Looking ahead, NVIDIA forecasts third quarter revenue of approximately $54 billion, driven by sustained demand from cloud providers and enterprise customers. This projection reflects not just momentum in the market, but also confidence in the company's ability to overcome regulatory and competitive challenges. Yet uncertainty persists. The need to tailor products for compliance with U.S. export controls could affect performance or cost structure, potentially opening the door for competitors both at home and abroad. The rise of Chinese chip makers, supported by significant government investment and a rapidly maturing ecosystem, represents a formidable challenge. For NVIDIA, staying ahead will require not only technical excellence but also strategic foresight and a willingness to adapt. In sum, NVIDIA's latest results offer a window into both the promise and the complexity of the AI industry. The company's record-breaking revenue and enduring growth defy fears of an imminent bubble, even as some experts urge caution. The evolving regulatory environment highlighted by President Trump's recent intervention and novel revenue-sharing arrangement illustrates the intersection of technology, geopolitics, and national security. And the competitive pressures from rising Chinese firms signal that the global landscape for AI hardware is becoming more contested than ever. As the world watches the next chapter of AI unfold, NVIDIA stands at the center of the story. A company whose chips are powering the future, whose fortunes are tied to the highest stakes in innovation, and whose every move is scrutinized for clues about what comes next. Whether the industry's growth proves sustainable or fleeting, NVIDIA's performance will remain a bellwether for technology, the economy, and the broader ambitions of artificial intelligence.